Good morning, everybody. Welcome back to Morning Markets on Monday, the 15th of June. A couple of things that I wanted to share with you this morning, which we've been discussing as an investment team. The first of which was looking back over asset markets over the past week and just reflecting on some of the moves that we've seen. And clearly, when we look back at the equity market itself, it was very much dominated by the downward move that we saw on Thursday and then the bounce back that we saw on Friday, obviously not recouping the losses made on Thursday. A couple of things to think about there and to think about what happened in other asset markets, and clearly negative performance in equity markets, but a much stronger performance in sovereign bond markets. So again, speaking to that theme of diversification, which we've been touching on throughout these morning market videos over the past number of months, and indeed has been a key theme of everything that we stand for at True Potential, the use of diversification through multi-asset portfolios. Thinking about this then in a little bit more, what are some of the factors that we've been discussing as a team that are influencing markets and are influencing sentiment in particular within markets? And that speaks to the four factors that we've been using as a means to reference this. So what are those four factors again? Thinking about the fiscal support packages that are available across the globe, the monetary support that is there from central banks. The third factor is around COVID-19 and what that is happening there from an infection rate, a fatality rate perspective, and in medical advances. And then finally, the reopening of economies. And taking each of those together, there's been little change in those four factors over the past week. What I would argue is that we've seen a further reopening of economies, and that's particularly key here in the UK, where we see non-essential retail shops opening from today. And that'll be something for us all to observe. How does activity return to those areas of the market? The other factor that has changed ever so slightly over the past week is COVID-19, and where we have seen some areas of a pick-up in the infection rate, and that's evident in some US states. It's also evident over the weekend. We've seen reports from China where they have seen a spike up in cases in very regionalised areas. But I think that's to be expected to an extent as economies try to reopen. But those are some of the factors that are clearly in the market's eye at this point in time and are hurting sentiment slightly, given the way that we have seen equity markets perform over the past couple of days, and indeed how we're seeing them perform this morning, both in Asia and then through into Europe through the futures market. The other thing that we were discussing this morning was around the Chinese data that was released yesterday. And what does this give us an indication of? Well, it's important because it gives us an idea of what's happening in the Chinese economy in the month of May. And China is several months further through the recovery phase than Western markets. And this maybe gives a bit of a blueprint for how we can think about the recovery. And clearly we have seen an improvement in economic data from China from the bottom. And that's been consistent. There has been month-on-month improvement, be that in fixed asset investment, industrial production, retail sales. I think the one thing that people are taking from the data today, and is evident, that the bounce back and the bounce back in the recovery month on month possibly hasn't been as strong as might have been expected. And that speaks to more of the anemic recovery that we're seeing in China post COVID-19. And that, to one extent, is maybe not a surprise, given the integrated nature of China into the global economy from a supply chain perspective. But what we are seeing is a slower rebound in activity in the domestic economy as well. So that's something for us to think about as we look forward to the changes that we're seeing in Western economies as they reopen. Turning to the week ahead, we've quite a lot of central bank meetings this week, including the Bank of England. I think that meeting could be quite interesting because if we cast our mind back to what we discussed post the minutes of the previous meeting, there were two members who were looking for an increase in the asset purchase programme. So we'll see if that comes through this month. It'll be also interesting to see if the Bank of England do make any comment around negative interest rates and their thoughts there, given that was something that was being discussed in the press, albeit by a number of MPC members over the past number of weeks. We also have the Bank of Japan meeting this week. In addition to that, we have the European Council meeting, which I think could be really interesting because this will be where they start to discuss the significant 750 billion euro support programme that we touched on a couple of weeks ago that did give support to European asset prices, both on the equity side but also on the bond side, where we did see spreads relative to Germany narrow for the likes of Italy, Spain and Portugal. So a number of things to watch over the coming days. Please join me again tomorrow. Thank you very much.